Good morning, everyone. It's Ben Buckner and Dan Bosse with the Ag Resource Company out of Chicago. Welcome to a new week. It's the last couple of days of September, which means up front and center on the 30th is final corn and soybean stocks in the United States, which really just helps us fine-tune total supplies in the next crop year. But we are looking at potential surprises here. I think we'll talk about corn for the most part. Thereafter, very soon, I think what will be on top of the trader's mind everywhere is, does the U.S. federal government stay open? What that means for some crop progress data at pretty critical times. And also the October WASDE, is it in jeopardy of not being published? And so we're all trading blindly and in kind of a vacuum. And what does that mean for the markets moving forward? Not real big picture changes from us, Dan, but I'll let you kind of break down what you see as we start this new week.
Yeah, Ben, no, thank you. Sorry, all. I'm coming to you from Madison, Wisconsin, the World Dairy Expo, so I'm in a hotel room, so forgive me for all the sound quality. I got a headset on. Hopefully it all sounds right. You're right, Ben. I think the surprise tomorrow will be corn stocks. Commercials are leaning towards the finding of additionality in corn, maybe in the tune of 50 to 150 million bushels. So that may lean negative. The old crop cash corn market never felt tight. Spreads in the board were wide, and it just felt like there's more corn around it. I still go back to that January report of this year, suggesting that maybe the U.S. corn crop was understated. But let's talk about where we are here today. And you're right, Ben, we do have face a government shutdown. The congressional leaders will be meeting with Trump today. If we don't get that extension, if you will, or some kind of ad hoc deal to get this government open at least for 30 days or something like that, we will shut down. At risk will be weekly U.S. export shipments and sales, and that October crop report looms large. It's going to be left to private estimates from companies like Ag Resource, StoneX, and you know, the S&P Global people to kind of decide maybe where this corn yield is and the soybean yield accordingly. But a government shutdown is never good. Bulls need to be fed every day. We've got a pretty good corn program going on to Mexico in particular. So, you know, it would be tough to lose that. But today we're watching very carefully. I mean, can December corn hold last week's lows at 418 and a quarter? Can the soybean market hold last week's lows at 1005? That'll be very key as we go into the numbers tomorrow. As we think about beyond this, though, I do believe, Ben, that there are some other issues we need to be aware of. You know, Trump and Secretary Hegseth will be having this meeting with all the generals that are flying in to, of course, discuss what we're hearing is maybe possible aggression and China becoming more apt in terms of maybe looking at Taiwan. So let's hope that doesn't happen. I don't think that would be a good turn for the world, but those kind of things will be discussed, and it's a problem thinking forward. Also, as we think about the harvest, and I think this is really what's kicking into gear, farmers are switching from corn to soybeans. So in my mind, I believe the farmer will be more aggressive in selling cash soybeans. Remember, the U.S. farmer is woefully undersold this year, estimated by many in the elevator business to be somewhere between 10 to 15% on both corn and soybeans. So if you think about what he'll sell first, I imagine it'll be beans. And so the harvest this week should find some farm selling. And I think that will weigh in the market as progressively we get further along in the week. And again, if we're shut down with the government, it's going to be more difficult to get trade deals completed. And that includes China. So something along with the weather background here that's somewhat bearish on the bean market. As we look at Brazil, Brazilian commitments on soybeans are now nearing 98 million metric tons. We believe that number is still 3 to 4 million tons from being finished. So there is another couple of tons that the Brazilians could sell to the Chinese. But if the Brazilian crop last year was actually larger than what USDA indicates, we could see this number further increase. And so I'll be watching very carefully on Brazilian sales commitments of soybeans. Do we move it up to like 103 or 105? And if that's the case, then Brazil had more beans last year than we anticipated. And that'll be very key going forward. So let's watch the footprints of the Brazilian market in terms of sales and what that means for China. Are they able to cover that last week of November and the first couple of weeks of December? Very important as we go forward. Russian exports on wheat are trying to normalize. We have a lineup in Russia that's now improving. In fact, if you look at the September lineup here, it was relatively good, even stronger in October. So with that in mind, I'm a little more optimistic that Russia's getting wheat out the door. That being said, there's some weather issues at port, particularly Novolinsk, that need to be watched in the next couple of weeks. But it does look like the export pace of wheat out of Russia is improving. Now, remember, they're having to export a lot of that spring wheat all the way from Siberia across thousands of miles to get it to the ports. That's going to cause complications this winter and also raise their costs. But today, Russian wheat prices are roughly $229 a ton for 12.5% protein, which is about up $1 from last week. The European markets unmoved. They're basically steady. So as we come in, let's watch that carefully. Of course, we're looking for news this week because our friends in China are on a week-long holiday called the Autumn Festival. Thinking about South America, because a lot of our attention will be turning down there as more U.S. crop gets under cover. We need to watch Paraná very carefully. They have been planting soybeans rapidly. It's a record soybean planting pace, somewhere around 4%, according to private estimates out of Brazil. Paraná is the big reason for that. So we need to keep the rain or the showers keep falling on Paraná. That soybean crop could be pushed out through Paranaguá or Santos port. That would make it important, if you will, for getting soybeans in the export pipeline, maybe by early January. So that, again, that Chinese window is for U.S. opportunity for export is getting squeezed even more looking forward. So, Ben, it's going to be a very interesting week. We will miss our friends in China, but again, U.S. harvest is going to be the key, along with the potential for a government shutdown following the USDA report, as you mentioned earlier.
Yeah, all makes sense. I think it's something to think about. A couple of things, one being, I think we'll get this afternoon corn and soybean harvest, at 18, 22% complete, something like that. But in the next 2 weeks, you're talking about 40, 50% complete. So lots of cash supplies coming to the market. I think you also bring up a really good point regarding the thing we're most concerned about, and that's U.S.-China, Chinese demand for soybeans or the lack thereof out of the U.S. The only way to know what the Brazilian crop size is in the end is to measure how much they exported. So we're still kind of in the dark. How big was that Brazilian crop? Can they export into December? That's something we'll all be kind of watching. So kind of watching, waiting, monitoring is probably the thesis the first half of this week for a lot of things, including weather patterns. So as usual, all the best in the markets. We'll be back tomorrow with a full rundown. Thanks for watching.